You see GST on pretty much every bill, right? From your morning coffee to that new phone you've been eyeing. You pay it, but what happens next? Who is actually responsible for making sure that money gets to the government? You probably think it's always the shopkeeper, but the real answer, well, it's got a few more twists and turns than you might expect.
So let's get right into it. Who is legally on the hook? In most cases, it's exactly who you'd guess, the person selling you the goods or the service. But, and this is a big but, the tax law has some really interesting exceptions. We're about to unpack the specific situations where that responsibility gets completely flipped.
All right, so here's our game plan for this explainer. We'll start with the one golden rule of GST. Then, we'll dive into a major twist called the reverse charge. After that, we'll see how digital platforms like your favorite apps fit in. And finally, we'll look at a special, much simpler scheme designed for small businesses.
Okay, let's kick things off with Section 1, GST's one golden rule. This is really the foundation for understanding who pays the tax most of the time.
You know, in any tax system, there's always a taxable event. It's the specific action that triggers the tax. For GST in India, that trigger is super simple. It's the act of supply. The moment someone supplies you with goods or a service, boom, GST kicks in.
And here it is, the golden rule of GST. By default, the person making the supply, the supplier, is the one who's responsible for collecting that tax from you and getting it to the government. This is the standard default setting for how things work.
And this breaks down that standard flow perfectly. A business sells you something, you pay them for it, plus the GST. Then, that business takes the GST part of your payment and sends it over to the government. Simple, right? This is how it works probably 90% of the time. But what about that other 10%?
And that brings us to Section 2, the reverse charge twist. This is where that golden rule we just talked about gets turned completely on its head.
Yeah, this is where it gets really interesting. See, the government figured out that sometimes it's way easier to collect tax from a few large, registered companies than it is from thousands of individual, smaller providers. So to make things more efficient, they just flip the model.
And this flip has a name, the Reverse Charge Mechanism, or RCM for short. It's exactly what it sounds like. The duty to pay the tax is reversed. It shifts from the supplier of the service over to the person receiving it.
This little comparison makes it crystal clear. On the left, in a normal situation, the supplier pays the government. But on the right, under reverse charge, that responsibility jumps over entirely to the recipient. They're the ones who have to pay the tax directly to the government. So when does this actually happen? This table gives us some perfect real-world examples. Let's say a business gets legal advice from a lawyer. It's the business itself, the recipient, that has to pay the GST to the government, not the lawyer. The same thing happens when a company gets services from one of its own directors or when a big corporation pays for a sponsorship. In these specific cases, the recipient is on the hook.
Okay, on to our third section, and this one is super relevant in our modern gig economy. When platforms pay the tax.
The law has a formal name for these platforms, an electronic commerce operator, or ECO. Basically, it's anyone who runs a digital platform for commerce. The easiest way to think about it? Your go-to ride-sharing and food delivery apps. They're the textbook examples of an ECO.
So what the government did was pretty smart. For certain services, they made these big platforms the official tax collector. Think about it. Instead of trying to get tax from millions of individual drivers or delivery partners, the government just deals with one big company. That's why when you book a ride or order food, it's the platform, not the driver or the small restaurant, that's responsible for paying the GST.
All right, finally, let's jump into our fourth section. The government recognized that the full GST system could be a bit much for small businesses, so it created a simpler path.
This path is called the composition scheme. It's totally voluntary, an optional choice designed to cut down on the paperwork and make it easier for smaller taxpayers to stay compliant without getting totally swamped.
So who can opt in? Well, if you're a small restaurant or you mainly sell goods and your total annual turnover is up to 1.5 crore rupees, then this simplified path is an option for you.
Now, for folks who primarily provide services, think a local consultant or a tailor, the threshold is a bit lower. If your turnover is up to 50 lakh rupees, you can also choose this simpler scheme.
And this slide really lays out the core trade-off. On the left, you have the regular scheme. It's more complex, but it lets you claim something called input tax credit, which is basically getting a refund for the GST you paid on your own business expenses. But on the right, the composition scheme is way simpler. You just pay one low, flat tax rate. But here's the catch. You can't collect GST from your customers, and you give up your right to claim that input tax credit. It's a choice, simplicity over a potential tax benefit.
Okay, so let's tie this all together. What did we learn? The golden rule is that the supplier pays the tax, but there are huge exceptions. Exception 1, under reverse charge, the recipient pays. Exception 2, for certain services, the e-commerce platform pays. And finally, there's the alternative, the composition scheme, which gives small businesses a much simpler way to handle their tax.
And that brings us to a final thought. The next time you look at a bill and see that GST line, you'll know that the journey of that tax money isn't always a straight line from the seller to the government. Knowing what's happening behind the scenes, does it change how you view the final price you pay?